Yeah, and meantime, shares of Broadcom are popping here in overtime, up about 3% after posting a beat across the board. The company also saying it expects AI semiconductor revenue to double year over year and expects current quarter revenues outlook to be above estimates. And joining us now is Christopher Rolland from Susquehanna. Christopher, welcome. So last quarter, Hock Tan was telling investors that the XPU business, the AI accelerators, did so well in part because these three major customers were doing better than expected, but also a fourth customer. What's your take on the outperformance of the business in this quarter and what that might say about that continued momentum?
Yeah, we're going to have to wait for a few more details for the conference call. Hock Tan is famous for dropping some pretty major bombs. Last quarter was this fourth customer. But so far from this report, what we can see is AI revenue beat, and the guide in particular looks about 700 million better than we were expecting. So we think this is probably related at this point mostly to Google and TPU. Our checks have been really, really strong there, pointing to upside. And so I think there's some pull in and some upsiding of orders coming from Google for TPU.
Christopher, given that, does this serve as a counter narrative in the overall AI trade to the concerns from Oracle from overtime yesterday? Or is this just Broadcom flexing a bit, perhaps that fourth customer showing that it can pick up some share?
Yeah, that's a really good point that you make. Oracle is really centered around GPU and will be moving into XPU, but not Google TPU. And so I think this report, by the time we unpack it all, is really going to point to upside in Google's TPU in particular. And all of those TPUs today, eventually MediaTek will be working in, but all of those today are Broadcom.
What do you think of the valuation here? I mean, it's had a pretty strong year. And just earlier on the show, we were talking about this rotation within the broader AI ecosystem right now.
Yeah, the valuation, if you look even just 12 months out, is stretched. But if you go out to 2027, and we think that you should, given these new customers that are going to be piling on here, we're probably in the high 20s. And I think that's much more reasonable for a growth stock like this. And we'll see if they can put a few more customers on top of that.